Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. Right, first off, let's deal with the big action of last week, and I am not referring to Friday's big bearish black Mariposa, though it was part of it. No, I am of course referring to last week being a weekly key reversal down. Friday's action actually sealed it, as last Thursday saw a daily key reversal up that challenged the overhead necklines of the recent cat's ears pattern formed over July to September. Now, the neckline of this particular instance has been made up from the combination of 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94 and a neckline currently 116.82 of the August-September 2020 head and shoulders top. And that's the break area. Recently, we've also seen the declining short-medium moving average, currently 116.93, also entered a frame as fresh resistance. Now, going back to original cat's ears pattern, we still have potential target X below in the 114.50 area. The key to achieving this target with the market maintaining itself below the break line, or lines in this case. All this comes in the shadow of September's monthly key reversal down. Looking further, an even bigger picture, we are still nicely moving down in between the upper tine, currently 117.45, and the middle tine, currently 113.75 of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action. So far today, no real attempt higher and a limited attempt lower as well. It seems the market is still taking it all in what has happened over the last 2 days of last week. Cable, aka sterling against the US dollar. A bearish engulfing pattern on Friday as the bearish combination overhead of the flatlining long moving average, currently 138.52, and the upper trend line of the July to date broken sideways triangle, which is also the July to date downtrend, that's currently at 138.39, finally eroded the upward pressure seen since late September and early October. In the end, it took the best part of 2 weeks to do it. Even the declining medium moving average, currently 137.71, kicked in its bearishness on a closing basis though. The recent support of the short medium moving average, currently at 137.10, which had held up the market in most recent days, was finally broken, and prices tested down to the broken lower trend line of the same sideways triangle, currently 136.71, where they held, with prices closing in between there and the short medium moving average. Thus, overall, we are still back within the broken recent sideways triangle. The recent pullback up has threatened a number of targets below for the sideways triangle, namely initial target X in the 134.90 area and a secondary target X1 in the 132.65 area. Now, we'd previously managed to achieve target X, and as you'd expect, the secondary target is harder to reach, so perhaps that may have been enough for that pattern. Well, we'll see. Additionally, I've droned on internally about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down has revitalized the idea, enough that I've placed some potential targets for this pattern. An initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. With early October's move up, this big pattern was, still is I suppose, under threat, despite Friday's action. Despite Friday's action, I really still suspect I may soon be contemplating targets on the upside, whether for the sideways triangle or for something else. Well, that last bit I'm actually not sure about at the moment. Now, so far today, a lower open and a move below the lower trend line again. However, it is not as enthusiastic as Friday's action, so I guess a question mark still hangs over all of this move lower. Euro sterling. A bearish harami on Friday, if only just. The topside was capped by the old early April low at 84.70, though the move wasn't as strong as one might think, since last Monday we've had rising lows all week. Meanwhile, further below we still have the declining support from the old upper channel line, currently at 84.05 of the broken May to August bear channel. This somewhat unusual support had been enough to halt the decline since late September, and most recently last Monday on a closing basis. Overall, we still have the idea out there that the most recent pattern is a large right-angled broadening formation, formed since late May. The pattern is made up topside from the flat April 2020 low at 86.69 and below by the lower channel line, currently at 83.09. However, we've stayed away from that lower channel line for quite some time now, and I suspect this pattern may soon be morphing into something else. So far today, a slightly higher open, a test up to the resistance in the 84.70 area, where we're sort of more or less held at the moment. US dollar against the Indian rupee. A bullish harami on Friday, if only just. We still seem to have little support below until the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. Overall, we're still above the broken downtrend and trendline combination of the April 2020 to date move, currently at 74.39, which makes up the large April 2020 to date sideways triangle. This still gives an initial topside target X in the 76.36 area and a secondary target in the 77.79 area. Obviously, the secondary target would be harder to achieve. All this has made two big assumptions. Firstly, that the break higher up and away from the sideways triangle is not a false break. Secondly, that the hesitation we've seen since mid-October may be a type of bull flag or bullish halfway hesitation type action. Now, these are big assumptions. So far today, a test up to the overhead obtuse and slowly rising short moving average, currently 75.04, before moving back to a little below where we started from and into the main body of last Friday's range. US dollar against the Brazilian real. An indecisive spinning top jammed up on a closing basis onto the overhead upper tine, currently 565.12 of the breach but seemingly broken late July to late August bullish shift pitchfork. This pitchfork has shown the bullish angle of attack since it was formed, though the upper tine was untested until last week when it was breached and seemingly broken, but then reasserted itself last Monday. Overall, well, the market is seemingly trying to push out of the top of this bullish shift pitchfork and has not had an easy time of it, as when it was first punctured 2 weeks ago. US dollar against the Mexican peso. Okay, the main event of last week was pretty straightforward, a weekly key reversal up. This action has raised some interesting possibilities. We already have the idea that below we have the upper trend line of the recent broken descending triangle, currently 20, 13, 37, plus a mess of moving averages. Now these all worked in concert to hold the decline 2 weeks ago and caused the pullback up last week. So you can see there seems to be some power down there. Last Friday managed to rise as far as the 50% Fibonacci line for the whole of 2021 so far at 2058.49, closing just below. Now overhead we have the old target X, the initial target for the descending triangle, in the 2089.20 area. This target was achieved 3 weeks ago. Now we still have the secondary target X1 in the 21.23.5 area further overhead. Now the interesting possibility is that the rise last week may make the mid-September to date action either a topping action such as a double top or a possible bullish halfway hesitation. The suggestion is that currently it seems the market may be leaning more to the latter than the former. This is because until last week all the actions had been in the shadow of the weekly key reversal down from 3 weeks ago. Now that we've seen an alternate weekly key reversal up last week, it may negate that earlier bearish shadow. Possibly. This is one to watch. So for today, another attempt higher over the 50% Fibonacci line at 2058.49 and towards the old target X and the March to date downtrend in between. Currently that's at 2082.98. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.